When is the last time you bought a car? Well, if you were like most Americans, it was a frustrating and unpleasant experience. Sure, it is exciting when you decide to get a new car, thinking about the brand, style, features, and even that new car smell. But then it often devolves into a stressful ordeal. Trying to pick a complex machine that most of us don't understand. Dealing with an information disadvantage around price and quality, and trying to haggle with pushy sales folks while they hold you hostage for what feels like an eternity. No wonder a recent survey showed that 87% of people found something about the car buying experience unpleasant. Unfortunately, investing can be an equally arduous experience. Everything from security selection to asset allocation, market timing, and risk management are full of challenging decisions and pitfalls. According to a 2017 survey by Dalbar, this has led the average stock investor to underperform the S&P 500 by more than 60% per year over the past 30 years. This is a staggering number, and why it is vital to have a consistent, repeatable process to ensure that your experience does not mirror that of your friends and neighbors. Hello. My name is David Hunter, and I am the Director of Research and Investments at CPC. And although I can't be much help regarding car shopping, I invite you to take a ride with me through the 7 steps of CPC's investment process today. My aim is to help deepen your understanding of how we calmly navigate an uncertain and complex investment landscape. When you are buying a new car, the first step is determining your needs. Is this vehicle going to be used for in-town driving? Off-road adventures? Transporting kids and grandkids? The same is true about investing. You can have the best process, investment products, managers, etc. But if we don't fully understand your situation, it isn't worth a hill of beans. This is why our advisors spend so much time understanding your individual circumstances, timelines, needs, and objectives, because each person's circumstances are so unique. Next, we must determine what investment building blocks to use. Some investors focus exclusively on a single area, like US equities, or technology stocks, or real estate. We consider this to be a dangerous and limiting approach that ignores a dynamic and shifting global economy. Remember, US equities only make up about 50% of the global stock market. We strongly believe that we should look for opportunities across the globe, at both stocks, bonds, and alternatives, and at small companies along with large ones. Stepping away from the car analogy for a second, what if I told you I shot a 68 last weekend on the golf course? Would you be impressed? Most people would say yes. But what about when you found out I was playing 9 holes of goofy golf with my kids? Not so much. The point is, if we don't know what the neutral or par score is, it is impossible to reflect on the quality of our performance. Thus, step 3 is to define your neutral investment portfolio. So, on average, how much of your portfolio would be in stocks versus bonds? How much is in the US versus international? What about large cap versus small cap? We also structure a range of guardrails around each asset class that defines the maximum and minimum you could own. Now that our baseline is set, we seek to add value by increasing exposure to attractive parts of the market. But how is this done? First, avoid the all too common mistake of looking in the rearview mirror. Looking back at what markets have done in the last 3 to 5 years and assuming that the trend will continue is not a roadmap for success. Remember the lessons of the tech bubble in the late 90s and the real estate collapse in 2007, just to name a couple. Rather, in the words of the great Wayne Gretzky, we want to skate to where the puck is going, rather than where the puck has been. Thus, we partner with our institutional consultant Mercer to develop forward-looking expectations for each asset class. We then employ an optimization process to target the asset allocation with the highest estimated return for your risk profile. Admittedly, this part of the process is very technical, so I will spare you the details, but feel free to reach out if you would like to dig around under the hood. Now that we have selected your current asset allocation, we need to determine how to implement the plan. There are numerous investment vehicles, all with different structures, functions, and benefits. Some include mutual funds, ETFs, separately managed accounts, private partnerships, REITs, etc. It's an exhaustive list, but each one has a purpose and a place. That is why we work with you as an individual to really understand your needs before deciding on which combination of investment structures is right for you. Manager selection is one of the most challenging aspects of investment management. Again, recent performer is a classic but poor method for selecting managers who will outperform in the future. We spend countless hours at CPC speaking with fund managers and their teams, analyzing holdings, scrutinizing drivers of performance, and understanding the process. This gives us a huge advantage and should allow us to hire top-tier managers who are likely to provide strong performance for years to come. Driving your new car off the lot is the highlight of the experience for most people. But after putting some miles on the tires, it is vital that you take it in for some service and maintenance. Here at CPC, we have a consistent process of monitoring and maintaining your investments as well. Ensuring that your portfolio remains balanced and in line with your objectives is an important aspect of the investment process. Well, this brings us to the end of the road. Thanks for joining me today, and I hope that you enjoyed the ride. If I didn't inspire you to run out and buy a new car, I hope that, at least, you gained a deeper understanding of how we manage money at CPC. Please reach out to us if you have any questions or would like to dig deeper into any topics. And if you have any friends, family, or colleagues who need us to save them from themselves, we consider referrals the greatest compliment we can receive. Thanks.